Hello, YouTube. It's been a rough start to the year for Tesla because it's going down, and now it looks like it might go down even lower. Red on the day, red in after hours. And what's so interesting is that normally when stocks go down into earnings, they have a chance to snap back. Not today, not Tesla. Tesla misses on fourth quarter revenue estimates on weak auto sales. We looked at the heat map, it's currently down by about 2.5%. This is important because this is the headline that drove the stock down. Tesla says 2024 volume growth may be notably lower than 2023. Oh, geez, that's called forward guidance. And the reason why in the title of today's video, I said, is this a warning for the Magnificent Seven? Well, this is really important because the expected fourth quarter growth, meaning for earnings, is really all here in the Magnificent Seven. A lot of negative numbers. So if these companies don't deliver, that's bad. Tesla is the worst of the pack, and we'll see exactly the reason why. Tesla's race to the bottom might make its $141 billion loss worse. Yep, that was on January 16th. The stock is lower. There's a lot going on at Tesla right now, notably that there are some competitors who are seeing this as an opportunity to flex, notably BYD. BYD sales executive stokes Musk rivalry just ahead of Tesla's earnings. Right, the Zhao Chengjing, probably can't say that correctly, says Tesla will face serious challenges. Well, looks like the stock's facing some serious challenges. Let's see. And then here we note that this is an article that goes back to December 26th. Chinese car maker overtakes Tesla as world's most popular EV maker. That is BYD. So Tesla was the pioneer. Tesla was the biggest dog. But as of right now, it's getting a little bit choppy. We're going to shift gears here and talk about on the weekend. Again, I've been away for a few days. Thank you so much for your patience. We talked about how there's going to be lots of noise out there, lots of news, lots of economic data, and lots of earnings. What do? Let's focus on levels. 480 is the only number that matters. All right, so that's really important. We will come back to that in a moment. But here's something that's really interesting too. January 18th, Tesla delays another pay adjustment as employees are unhappy with the last bump. Tesla told employees today it would do another pay adjustment, a second in a few weeks, after employees expressed disappointment with the last one. So why is this important? Well, because Tesla missed on earnings. So they reported 3% revenue growth, trailing estimates. Auto sales increased just 1% versus last year. So what's important here is the earnings are 71 cents versus the 74-cent estimate. They're profitable, but again, they command a very high premium. So people are questioning that right now. And then the revenue also missed. They did beat on free cash flow, but that forward guidance number does not really look all that good. So it's looking a little bit bleak. I would not say it's down and out. I would not say that the rest of the Magnificent Seven are going to be a preview for Tesla. I'm just saying that it looks like it's an uphill battle ahead. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. Thank you so very much ahead of time. I really appreciate you guys as my audience. Let's go forward and talk about the show. So if big tech does not deliver, the rest of the market better start picking up the slack here because we're in the thick of earnings, and this doesn't look all that great. So now let's shift gears and talk about two great companies. So here we're going to talk about NVIDIA. This goes back to June 7th with Stanley Druckenmiller, who is probably one of the best investors of our time. He says that NVIDIA is worth holding for the next few years amid AI bullishness. Look at the date, June 7th. Now let's go to NVIDIA, who is arguably the best stock in the entire market right now. Let's find that June 7th date. It's right here. And I did the number ahead of time. We're currently up by 66% after his comment. Why does this matter? Well, it matters because this guy's been crushing it. And another 66% is like a really big move. If we look here to exactly what he told us that what he said is hold on to it for 2 years. Man, he's up 220%. He pulled a 187 on the stock market. If you don't know what that means, just Google it. It's pretty funny. So the Stanley Druckenmiller guy seems pretty smart, and he's got a lot of winning positions. So it's like really important. NVIDIA has grown to be his largest position just because of its growth. And what he's telling us is a few years amid AI bullishness. We're now 6 months later. So a couple of years is a lot longer than a couple of months. So plus 66% for NVIDIA. This might just be a Tesla story. If we now look over here to Netflix, Netflix reported the best subscriber growth they had since 2020. We all know what happened in 2020. Everyone was stuck at home, Netflix and chilling. So Netflix did well. Gap and Go, looking a little bit exhaustive now with this big upper wick, but definitely looking better than Tesla. So the reason why this is notable is because Tesla has been on a slide so far this year. And I think it's actually off to its worst start. I think its worst start ever as being a public company. So looking at a 12-month chart, like the percent decline is just quite large. Actually, worst start to the year, but 2022 was different. It didn't start off as bad, but it ended worse. So, anyways, let's tell the story a little bit more. So Elon looks like he's quite distracted. I think he runs like 5 different companies, and where his cash is coming from is not really getting his attention anymore. And he said that I need more Tesla stock or more voting rights if I'm going to bring all of my AI stuff to Tesla. It really seems like this is going to be a really big uphill battle. If we now look here to year to date, what's important to note is that Tesla is the only one of the Magnificent Seven that's not doing well. When people are saying, hey, it's time to kick it out, might be time to add a different company. Why? Nvidia up 25% so far this year, Apple 4, Google 7, Meta 11, Microsoft 8, AVGO up by 15. Tesla does not really look all that magnificent right now. Sorry. If we move forward to the headline here, hey, it's probably going to be worse for the rest of the year. It's only January 24th. Oh, crap. That doesn't sound really good. And with the rest of big tech reporting next week, what's really important is the stage is being set. And what's the stage being set with? Well, Microsoft is now the most valuable company in the world. So, cementing strength of AI rally. Stanley Druckenmiller saying the AI bullishness could last for the next couple of years. And he's holding on tight. He's up 220%. So these big tech giants better deliver. We went through and looked at these this morning on the pre-market stream. And what we saw was that we're looking for roughly a 4 to 5% EPS beat. Again, on a whisper for a lot of these companies, largely coming through next week. What's important is that NVIDIA is not going to report for a while. They report here going back to February. They report in about a month, in about 5 weeks. But the fact the chart has been on an absolute tear, rocking the solid uptrend, hey, that's like a strong chart. What will be really interesting is AMD, because AMD is really powering up here. And look, earnings are coming up really soon. So Magnificent Seven, this one reports next Wednesday. Man, the market's going to start getting a whole bunch of information in terms of data. But remember, there's a lot of noise out there with economic data, with news, with earnings. So let's focus on the levels. Let's round the story out by looking at a few more things, and then we're going to push forward. So a year ago, we were greedy. A month ago, we were in extreme greed. A week ago, we were in greed. We almost went back down into neutral, and now we're right back here into extreme greed. So we went down here as low as about 61, and that is on the cusp of going back in here to greed. So the market is definitely getting spicy. Something else that's really notable is that the S&P low of the day was actually printed with a dark pool print. So what I was talking about was at some point this morning, remember, we said gap ups are for, that's right, gap ups are for selling. So today was finally to sell. We noted that the last couple of days here, if you look at the S&P, again, I'm looking at hollow candles intentionally because this gives me a data point. It tells me whether or not we closed higher than we opened or we closed lower than we opened. So the last couple of gaps have not been for selling. They've been a bear trap, right? Gap, buy. So gap up, fill the gap, pass, and then advance. Gap up, fill the gap, pass, and then advance. Gap up, a little bit of weakness. Now we see a gap up in strength. And now this looks a little bit more like an exhaustive gap. Exhaustion. Why? It gapped up too much, made it all the way to 488.77, awfully close to that 490 number I talked about. And as of right now, it's not looking quite as strong. Again, it's only a little bit after the market closed, but what I was looking for was this right here. We gap up, we fill the gap, and then just slingshot higher. What did we do today? Gap up, tried to hold it. This looks like a prop game. Then we come back down, slide right back down to the average. So if we open up flat tomorrow, I want to see what happens here. There was a lot of euphoria with China news with roughly $300 billion in stimulus coming into the market. Closing at or near the low of the candle is not exactly great. But remember, we are over 480. So Justin's telling us all about the noise, but does it matter? Not really, because we want to make sure we pay attention to 480. That is it. Into the close of the month, we're going to get more big tech earnings. We're going to get the Fed. We're going to get a lot of stuff. So we can keep tracking all these things, but we know that Tesla is now setting the stage. So Netflix crushed it. Tesla missed. And now we got a whole bunch of earnings to go through. So what I want to show you here is that on SPY, the low of the day is 484.88. However, if you look at a short-term time frame, the low of the day here on the cash market is actually 485.01. So How exactly did we get that 484.8? I can't talk right now. It's through a dark pool print. So if we go here to our platform, we're looking at pools or dark pools. We're going to click on levels, and there was a dark pool print for how much do we have here? 484.88. That was about 6% of the average daily volume, a $2.5 billion print. So that gets pushed to the tape. So that's what happened. A dark pool print transacted today. Billions of dollars traded hands, and someone wanted to sell, but didn't want to sell in the open market. So what this means is that we're definitely seeing a lot of volatility, and Tesla is not really impacting the market after hours here. We note that it's holding up really strong. However, when we're going into a risk-on rally and the risk asset that is the poster child for all these moves is lower, I start to get a little bit concerned. So again, we want to make sure we listen to Warren Buffett, which I've been saying over and over. So if we go here to Warren Buffett's quote, what does he tell us? Well, it's not that complicated. Have patience. Otherwise, the market's going to transfer money from you over to people like him. We did talk about that. We did. So what this really means is that there's a lot of information out there. As of right now, we've been seeing the VIX, the 10-year note, and the dollar backing off this week, which means that the chips lead tech lead SPY, and we just went through NVIDIA. We just talked about Microsoft. A lot of these companies are doing well. So we want to see these things continue to slide for the rest of the month and even beyond. Otherwise, the risk is that we could fall back below. Right now, there's no warning signs for S&P above 480, and there's no warning signs for the NASDAQ over 410. But as we know, the market takes a staircase up and the elevator down. So I want to make sure of is that people are not overlooking a lot of other information. Why? Well, the dollar had a pretty big snapback today, bouncing off the 50. We'll look here to the VIX. The VIX is up by 5% nearly. Right here back to 13, the lowest of the teens. And the 10-year note is up. So what does that mean? Well, it means that the things that were helping the market for the last couple of days, VIX, 10-year note, dollar all being down, that's reversing. Things are getting volatile. Yes, things are getting quite volatile. And what this really means is that there's going to be even more noise as we go through the rest of the week, the rest of the month. Like if we look here to like China stocks, like, man, huge move. So I think we're up like, I don't know, like 8% or something in 2 sessions here. So yeah, we went as high as 10% in 2 bars. Whoa. So with all this noise, I really want you to pay attention to one thing. And that's exactly what I talked about on the weekend deep dive. So please click on the video now, queued up here on the left-hand side if you want to watch that. If not, subscribe on the right-hand side and come hang out tomorrow at 9 a.m. when we're going to take you through the market open. If not, thank you so much for tuning in.